Thank you, Paul. Good morning. I'm very pleased to be here with Senior Deputy Governor Carolyn Rogers to discuss our decision and monetary policy report. Today, Governing Council maintained our policy interest rate at 2.25%. Our forecast for economic growth and inflation in Canada has not changed significantly since our October projection. As the Canadian economy continues to adjust to U.S. trade restrictions, we expect the economy to grow modestly and inflation to stay close to our 2% target. However, uncertainty around our forecast is heightened. The range of possible outcomes is wider than usual. U.S. trade policy remains unpredictable, and geopolitical risks are elevated. Our monetary policy decisions are focused on keeping inflation close to the 2% target while helping the economy through this period of structural change. Governing Council judges the current policy rate remains appropriate, conditional on the economy evolving broadly in line with the outlook we published today. With heightened uncertainty, we are monitoring risks closely. If the outlook changes, we are prepared to respond. Aujourd'hui, le Conseil de direction a maintenu le taux directeur à 2,25%. Notre prévision pour la croissance et l'inflation au Canada n'a pas beaucoup changé depuis la projection d'octobre. Alors que l'économie canadienne continue de s'ajuster aux restrictions commerciales américaines, on pense que la croissance du PIB sera modeste et que l'inflation va rester près de la cible de 2%. Mais une incertitude accrue pèse sur notre prévision. Il y a plus de résultats possibles que d'habitude. La politique commerciale des États-Unis reste imprévisible et les risques géopolitiques sont élevés. Nos décisions de politique monétaire visent à maintenir l'inflation près de la cible de 2%, tout en aidant l'économie à traverser cette période de changement structurel. Le Conseil de direction estime que le taux directeur actuel demeure approprié à condition que l'économie évolue de manière généralement conforme aux perspectives publiées aujourd'hui. Comme l'incertitude est accrue, on surveille les risques de près. Si nos perspectives changent, on est prêt à réagir. So let me expand on what we've seen in the economy since October and what we see ahead. Tariffs and uncertainty continue to disrupt the Canadian economy. After a strong third quarter, economic growth likely stalled in the fourth quarter. Exports continue to be buffeted by U.S. tariffs, while domestic demand appears to be picking up. Household spending is expected to continue growing moderately, supported by past cuts in interest rates and rising disposable incomes. U.S. tariffs and related uncertainty have held back business investment, but we expect some modest strengthening in investment as businesses adjust to the new trade environment and governments increase infrastructure spending. The impact of U.S. tariffs can also be seen in the labor market. Employment weakened in the first half of 2025 as sectors hit hard by U.S. tariffs cut production and jobs. In recent months, overall employment has risen, led by hiring in services like healthcare. At the same time, slowing population growth is reducing the number of new entrants into the labor market. Still, the unemployment rate remains high at 6.8%. Youth unemployment is particularly elevated, and relatively few businesses say they plan to hire more workers in coming months. Overall, economic growth is expected to pick up gradually. The Bank of Canada projects annual average GDP growth of 1.1% in 2026 and 1.5% in 2027, broadly in line with our October projection. Turning to inflation, it averaged 2.1% last year and has now been within the 1 to 3% band for 2 years. If we focus on recent movements, CPI inflation rose to 2.4% in December, boosted by base year effects linked to last year's GST-HST holiday. The bank's preferred measures of core inflation have eased from 3% in October to around 2.5% in December. The bank expects CPI inflation to stay close to the 2% target over the projection, as tariff-related cost pressures are offset by excess supply. Uncertainty around this projection is unusually high. Geopolitical risks are elevated, and the upcoming review of the Canada-US-Mexico agreement is an important risk to the outlook. It's also still too early to tell how the Canadian economy will adjust to current tariffs and ongoing uncertainty. The transition to the new trade environment could be smoother than we expect, with stronger business and household spending. Alternatively, the labor market could weaken further as trade impacts deepen, leading to lower household spending. And financial conditions could also tighten if volatility returns to markets. Considering both our baseline forecast and the risks, the Governing Council discussed the future path of monetary policy. While Council judges the current policy rate is appropriate based on our outlook, the consensus was that elevated uncertainty makes it difficult to predict the timing or direction of the next change in the policy interest rate. So let me wrap up. L'économie canadienne s'ajuste au vent contraire de nature structurelle liée au protectionnisme américain. Les entreprises réorganisent les chaînes d'approvisionnement et investissent dans de nouveaux marchés. On s'attend aussi à une réaffectation de capitaux et de main-d'œuvre quand de nouvelles possibilités vont ouvrir. Ces changements, qui comprennent des échanges plus diversifiés et une meilleure intégration des marchés internes, vont favoriser une certaine relance de notre capacité de production. Mais ça va prendre du temps. La politique monétaire ne peut pas compenser les dommages structurels causés par les droits de douane, ni cibler les secteurs de l'économie durement touchés. Mais elle peut apporter un soutien en aidant l'économie à traverser cette période de changement structurel, tout en maintenant l'inflation près de la cible de 2%. La Banque s'engage à préserver la confiance des Canadiennes et Canadiens dans la stabilité des prix pendant cette période de bouleversements mondiaux. The Canadian economy is adjusting to the structural headwinds of U.S. protectionism. Businesses are reconfiguring supply chains and investing in new markets. We also expect to see some reallocation of capital and workers as new opportunities open up. This restructuring, including diversifying trade and a more integrated internal market, will support some recovery in our productive capacity, but it will take some time. Monetary policy cannot compensate for the structural damage caused by tariffs, and it can't target hard-hit sectors of the economy. But it can play a supporting role, helping the economy through this period of structural adjustment, while maintaining inflation close to the 2% target. The bank is committed to ensuring that Canadians continue to have confidence in price stability through this period of global upheaval. And with that, the Senior Deputy Governor and I will be very pleased to take your questions. Thank you.